Joining us right now for insights on the markets, the Fed, and much more, Roger Altman, founder and senior chairman of Evercore. Good morning to you.
Good morning.
Let's hit the Fed first and just try to understand what you think is going to happen next. And do you think that they were meaningfully behind, and that's why we went for the 50 basis points as opposed to something else?
If you're asking whether they were behind the curve, no, I don't think so. I think what essentially happened was that the Fed saw the path on inflation steadily downward as more certain than the path on labor markets, a little more uncertainty about labor markets. So it took a stronger step to fortify labor markets and went for 50. But I don't think it was a sense that they were behind the curve, including that they've signaled 100 basis points for the full 2024.
Right.
And they could have more or less just as easily said, we'll do 25 now, we'll do 100 for the full year. And that would have been received pretty similarly. So, no, I don't think they were behind the curve.
Can we officially say this is a soft landing?
Oh, I think so.
You think this is just a beautiful glide path?
I don't think it's mission accomplished yet because inflation has not hit, as we all know, the Fed's 2% target. But growth is resilient. We're give or take around 2% now. Corporate profit outlook is good. Equity markets are on track to have their best year since 1960. If you annualize the S&P 500 for the rest of the year, best return since 1960, 4.2% unemployment rate, and just a perfect, or not, nothing's perfect, but a nearly perfect overall environment. Now, is it done? No, because we have to see inflation get to 2%, although this Friday's PCE figure, I think, is going to come in about 2.2 annualized, really good. So, if the landing is finished and the Fed hits its target, Powell, I think, will deserve an A, and it will be a pretty miraculous achievement.
Talking about the market, though, what do you think the market? How much do you think the market is betting on the presidential election and any of the policies that are going to come 12 months from now in terms of what the market's thinking today? Or do you think it's still such a jump ball that has almost nothing to do with it?
I think it's mostly the latter. I don't think the market is paying attention to the election. In fact, I don't think the market's paying attention to great big risks in general. Because if you look at the international situation, you want to talk about
big risks.
Building storm clouds.
You would think those would be massive storm clouds.
And the market isn't paying any attention to that. Now,
and why is that? And is that a mistake?
Well, in my own experience, historically, the markets don't pay attention to X, Y, or Z until they do.
Right.
And they do all of a sudden. So if we have a truly wide war in the Middle East, or Russia actually achieves its objectives in Ukraine, or China's territorial aggression, whether it's Taiwan or the Philippines or so forth, goes much further, then all of a sudden the markets will pay attention and they won't like it. By the way, it's the same thing about the fiscal trajectory of the United States. The market's paying no attention to it. And at some point, and it could be 2, 3, 4 years from now, I don't know, it will pay attention and it won't like it.
Can I ask you a different question? We were talking earlier, this is maybe a curveball of sorts. We were talking about Leslie Stahl interviewed Lena Khan last night on 60 Minutes. And she was asked whether her policies, Lena Khan's efforts at the FTC, were stifling the U.S. economy and could actually create some kind of damage. And yet you were just talking about how the stock market is doing as well as it has.
I don't know about those numbers, Roger.
So my question, where are you going with that, Joe?
I just don't know about those numbers. We're up almost 20%. In 1995, the market was up 35%. How are we going to get to?
I believe, I think I'm right, that if you
well, with October,
take the gains for the year, extrapolate them to the end of the year, I think it's the best year for the S&P 500 since 1960.
Well, we're up 19.5, and in 95 we were up 35%. So there's no way.
I double-checked this last night, but if I'm wrong on it, it's a great year. No matter how you slice it.
And that's what I was going to ask. If it's such a great year, why do you think there's been such opposition, for example, to a Lena Khan? Do you believe the economy could be growing at leaps and bounds better, or the market could be doing even better by leaps and bounds if the regulatory regime were somehow different? If you think we were drilling more oil? I ask you these questions because this is sort of central to the political debate right now.
No, is my answer. Let's take the second part of your comment. U.S. energy production is at an all-time high. The United States is the largest oil producer and total oil and gas producer in the world. That's unbelievable. In terms of the FTC and the Justice Department, I think they're having impacts only at the margin, small impacts. Now,
and do you think they're going to have good long-term impacts?
Well, I'm not a fan of Lina Khan and Jonathan Kanter because I think they're just too ideological about it. They're just anti-merger zealous. Jonathan Kanter famously has a plaque on his desk saying, break them up. And, I don't think that's a mature approach to antitrust policy. So I just think they're zealots, and it's somewhat crazy. But I don't think they're having a big effect on the economy or the markets, no.